I think the Fed's new stance, which is so much more dovish than even the market was anticipating, the fact that we've got the 10-year trading at 249 this morning, that is, by the way, 3 basis points away from the yield of the 3-month. Why is that important? Because all of Wall Street sell-side firms, all of their recession models, that is the spread that they use. They don't use the 2-year Treasury to the 10-year. So they're going to have to increase their recession odds in about 3 basis points more of flattening between those two. And I think that is starting to play out just in what we just heard about Nike. The weakness this wasn't global weakness. This was weakness here in North America. And I think we're starting to see some of the same. Look, we have mortgage rates at more than a year low, and we're not seeing a response in residential real estate. That's not how this is supposed to play out.
What's driving that? You mentioned this idea that we're getting closer to an inversion in the yield curve. Mm-hmm. What exactly are the main driving forces behind that? So
I think people need to understand something about wage inflation. The reason that wage inflation is the most lagging of all economic indicators, which Jay Powell knows full well, towards the end of cycles, as managers start to lay off employees, right? People were so focused on FedEx and missing because of the international and the global weakness. I was focused on the fact that they had voluntary layoffs. Layoffs are up 7 months in a row, year over year. And what we're seeing is managers are beginning to fire the workers underneath them. If you have people on higher salaries in the wage pool and fewer on lower incomes, it's going to naturally skew wage inflation up. So for all of the excitement about that 3.1% print in the last labor report, I say you have to fade that, because what's much more telling is the fact that we had initial jobless claims trough in September, and we've seen them slowly but surely tick up.
Does the Fed have it right?
I think the Fed is trying to desperately avoid a 1937 remake. I really do. I think Jay Powell understands his history. He understood that maybe the December hike was more than the economy could take, that might have been a policy error. And I think the reason he's swinging the pendulum so far back over to which basically it's taking 2018 and 2019. All the statements from 2018 have been taken off the table. The Fed has effectively broadcast the message: we were wrong. We were wrong that the economy could handle the tightening that we had anticipated. I mean, 7 out of the 17 members say that there won't be a rate hike in 2020. The Fed is broadcasting that we're going into recession.